Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Welcome to Tax Smarts Unlocked. I'm David Robson, CPA and fan of people who turn ideas into income. Today, we're unlocking tax planning for the creative business. Artists, designers, photographers, filmmakers, musicians, developers, makers, small studios, and agencies. If you sell original work, license IP, perform, craft products, or build software, you're in the right spot. Our mission is simple: maximize legal deductions, minimize risk, and keep cash in your business. We'll cover structures, core write-offs, home office, travel, equipment, inventory, mixed income, QBI, credits, multi-state traps, retirement, hiring, record keeping, and year-round tactics. I'll share quick case studies so you can see savings in action. Let's get you confident before the next tax deadline. Grab your notebook and coffee. Practical steps start now together. Most creatives start as sole proprietors, or single-member LLCs taxed as sole props. That's simple, but every dollar of net profit faces income tax plus self-employment tax. As profits rise, consider an S corporation election for your LLC. You pay yourself a reasonable W-2 salary subject to payroll taxes. Remaining profit passes through free of self-employment tax. The strategy works when ongoing profit exceeds a fair salary after costs like payroll service, state fees, and bookkeeping. Partnerships suit multi-owner studios but watch guaranteed payments and self-employment exposure. C corporations rarely fit unless you're raising capital or building scale technology. Whatever you choose, maintain separate accounts, written agreements, and timely filings to preserve both deductions and liability protection, and keep auditors and investors happy as well. Maximize ordinary and necessary costs tied to your craft. Think supplies and props, instruments and cameras, lenses, lighting, drones, software subscriptions like Adobe, Pro Tools, Final Cut, Figma, GitHub, and project management. Studio rent, co-working, rehearsal spaces, stage or location fees, soundproofing, and modest build-outs qualify. Website hosting, domains, online store platforms, marketing, ads, email services, and SEO are deductible. Education that improves skills, workshops, conferences, masterclasses, plus professional dues, union fees, show or festival entries, and cloud storage count. Home office is powerful. Use simplified per square foot or actual expenses for rent or mortgage interest, utilities, insurance, repairs, and depreciation. Keep photos, measurements, and reimburse through your entity when applicable. Internet and phone are partially deductible based on business use. Document your allocation clearly each month. For vehicles, choose standard mileage or actual expenses. Mileage is simpler. Keep a contemporaneous log with date, destination, purpose, and miles. Apps help. Actual requires tracking gas, insurance, repairs, lease, or depreciation, then applying your business percentage. The method you start with can lock you in, so decide early. Travel is deductible when business is the primary purpose: airfare, lodging, rides, baggage, and tips. Use federal per diem to simplify meals and incidentals for travel days, or deduct 50% of actual business meals. Personal sightseeing isn't deductible. Mixed trips must be apportioned. S-Corp owners should reimburse mileage and travel through an accountable plan rather than paying personally without documentation. Save itineraries, receipts, and call sheets to substantiate purpose and business benefit if ever audited. Gear timing affects taxes. Section 179 lets many small businesses expense the full cost of qualifying equipment placed in service during the year, subject to taxable income limits. Bonus depreciation offers additional immediate write-offs for eligible assets, though percentages are phasing down, so timing matters. For low-cost items, the de minimis safe harbor allows expensing up to $2,500 per invoice or item with an annual election. Consider buy versus lease. Leasing smooths cash flow. Buying may create larger deductions when you need them. Capture serial numbers, invoices, and in-service dates. When you sell or trade gear, plan for depreciation recapture and match upgrades to profitable periods. Keep warranty terms and maintenance records. They support useful life and business use during an examination later on. If you sell physical work, you have cost of goods sold. Include direct materials like canvas, paper, fabric, wood, metal, clay, ink, paint, framing, stretcher bars, prints, packaging, labels, and shipping materials. Small business inventory rules let many creatives treat inventory as non-incidental supplies, deducting when sold or when used and consumed if books reflect that method. Track quantities and unit costs so pricing reflects reality. Income streams vary: sales, licensing and royalties, streaming payouts, affiliate revenue, memberships, crowdfunding, grants, awards, teaching, and appearance fees. Expect 1099 NEC for services, 1099 MISC for certain royalties and prizes, and 1099K from platforms. Reconcile forms to dashboards. Avoid double counting. Book gross income, then record platform fees separately. Track grant terms. Most are taxable. Match reward costs to campaigns. The qualified business income deduction can reduce up to 20% of pass-through profit, but planning matters. Many creatives are not specified service trades unless revenue is primarily from reputation or endorsements, or falls into consulting-like services. Eligibility depends on taxable income, so manage thresholds with retirement contributions, HSAs, and timing of expenses or billings. S-Corp owners should remember QBI is computed on business profit after wages. Set salary thoughtfully to balance payroll tax savings and the deduction. If you operate multiple activities, keep separate books to identify which qualify more clearly. QBI reduces taxable income, not taxed directly. Documentation and projections are essential. Mind aggregation rules and loss carry forwards, which can reduce current QBI. Revisit annually as income patterns evolve and diversify prudently over time. Innovators can benefit from the federal research credit when projects aim to create or improve products, processes, or software through systematic experimentation. Startups may apply up to $500,000 of credit against employer Social Security payroll tax each year, improving runway. Strong contemporaneous documentation is mandatory. Project lists, hypotheses, iterations, time tracking, contractor costs, and materials used. Meanwhile, Section 174 currently requires capitalizing and amortizing research and software development over 5 or 15 years, which can create taxable income despite cash losses. Model the impact early, adjust pricing and payroll plans, and pair an R&D study with projections to capture credits while managing cash and estimates. Consider state R&D incentives too, and coordinate with your grant strategy, capitalization policy, and bookkeeping for maximum benefit overall. State and international rules can surprise. If you sell physical goods, you may owe sales tax where you have nexus from location, inventory at a fulfillment center, or economic thresholds. Some states tax digital goods and downloads. Marketplace facilitator rules often shift collection to platforms, but you may still need to register or file. Touring, shoots, and pop-up sales can trigger multi-state income taxes. Internationally, foreign payers may withhold tax on royalties. Tax treaties can reduce that if you provide W-8BEN or W-8BEN-E before payment. Digital services into the EU or UK can create VAT obligations. Track gross and withholdings, claim credits, and price accordingly. Decide who handles compliance, the platform or you, and document terms in contracts and checkout pages to avoid unpleasant surprises later. Always. Two birds, one stone, reduce tax and build future security. A solo 401k allows employee deferrals plus employer contributions, often beating a SEP at modest profit levels. Adopt during the year. High earners can explore cash balance or define benefit plans for larger deductions. If eligible, fund a health savings account. HSAs are triple tax advantaged. Self-employed health insurance premiums are deductible above the line when you have profit. Turning passion into profit. Treat it like a business from day one. Separate bank account, pricing, marketing, and systems. The hobby loss rules disallow deductions beyond income without a profit motive. Document your efforts. Keep invoices, contracts, a website, and a simple plan. Professional behavior wins with banks and auditors, and clients over time as well. When you bring in help, classify correctly. Contractors control how they work, provide their own tools, and face profit or loss. Employees fall under your direction, often work set hours, and use your equipment. Misclassification risks payroll tax, penalties, and interest. Get W-9s before paying contractors. Issue 1099 NEC by January. For employees, set up payroll, workers' compensation where required, and state accounts. Now, records. Use a separate business bank account and card. reconcile monthly, and adopt a digital receipt system. Keep contracts, licensing files, releases, mileage logs, itineraries, 1099-Ks, sales tax filings, and payroll reports. Organized books are the cheapest audit insurance. Reconcile platform dashboards to deposits and tax forms monthly so income isn't double counted and fees are captured. Every single month matters. Consistency. Planning is a season, not a day. Map launches, exhibitions, album drops, tours or product releases, and time expenses into profitable months. Set quarterly estimates using safe harbors, revisit W-2 withholdings, and run mid-year projections to capture QBI, retirement, and credit opportunities. Quick wins. An illustrator reclaimed home office, and COGS, saving thousands. A designer used an S-Corp, accountable plan, and solo 401k to trim self-employment tax. A startup leveraged the payroll offset R&D credit amid Section 174 amortization. Bring in a pro when you face multi-state sales tax, hiring, big equipment buys, six-figure profits, or entity changes. Thanks for listening. Now go create confidently and profitably. Subscribe, share with a fellow creative, and visit us next episode for more proactive tax strategies all year long. Cheers.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.